Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. I've spoken previously about major investors taking a stand on climate change, forcing companies to commit to action. The Say on Climate vote is a global trend, calling on companies to adopt an investor vote on climate reporting. But the pressure on ASX-listed companies to take decisive action is set to escalate further, with the Australian Council of Superannuation Investors putting them on notice. ACSI is a group of 37 super funds and carries significant weight. On average, its members own 10% of every company on the ASX 200. The council has now circulated a set of expectations for companies exposed to climate-related risks. Louise Davidson is the Chief Executive of the Australian Council of Superannuation Investors. Louise, welcome to Fear and Greed.
Thanks for having me, Sean.
So why are you taking this action right now?
Well, we've been talking to companies for a long time about climate change and the way that they're managing climate risk within their portfolios. But we think that it's time for companies to step up and go a little further than they've gone to date.
Okay, can I ask, is this about impact investing or is it about a financial risk within a portfolio?
Yeah, no, this is definitely about financial risk within a portfolio. So you can see, actually quite interesting, over recent weeks, APRA, the regulator of financial services organisations, has put out a clear list of expectations that they have of, say, super funds and banks, etc., about managing climate risk. And the Reserve Bank has also made it clear that they think that directors and financial services institutions have to manage climate risk within their portfolios. So it's all about protecting the retirement savings of millions of Australians, Sean.
ACSI, Reserve Bank, APRA, they've all come out literally in the last 4 weeks and said climate change is a financial risk. Is that because it's a real thing, or is it as much because there's so much a weight of money heading into that part of the financial sector or the economies, I suppose, that if you're not in it, you're going to lose out?
I think it's actually both. Climate change is clearly a real thing. And one of the risks, for example, that we want companies to make sure they're managing is the physical risk that a lot of companies are exposed to from increasingly extreme weather events. But the fact is that the world is moving on this. There's been some really big policy announcements made by all of our major trading partners now. And so that means that Australian companies, if they fail to act, will be left exposed financially by those policies that are being set overseas.
Okay, is it harder for Australian companies though, because our government, I'm not going to the pros and cons of it, but our government has not set a target of net zero emissions by 2050, whereas many of our major trading partners have, and increasingly they are, and the President Joe Biden virtual summit last week, Australia was criticised for not doing it. Does that forget the politics, does it make it harder for Australian companies?
Look, so many of our companies really are global companies. They're operating on the world scene and they take their cues from what's going on around the world as much as they do from Australia. I don't think it really makes it harder for them. I think it's pretty clear to Australia's large companies that they have no choice but to act on climate change at this point, because that's what the world expects them to do, and they want to have a place on the world stage. They want to be able to operate in foreign countries, they want to be able to attract foreign investment, and they want to be able to sell their goods overseas.
Okay, I just want to take a step back so that our listeners understand just who ACSI is. Can you give our listeners a guide who your members are? Because in all likelihood, all of us are actually in some way represented by ACSI through our super funds.
Yes, that's true. Well, I won't list all our members because,
no.
As you said, there's 37 of them, so we might be here for a long time. But essentially, our members are Australia's large superannuation funds, and so you're right. Many listeners will be members of our members. So if you work in office work, in construction, in health, in hospitality, chances are you're going to be invested in one of our members. And our members, they represent around about 10% of the shares of most large Australian companies. And so they have a real interest in the success of those companies.
Stay with me, Louise. We'll be back in a minute. My guest this morning is Louise Davidson, Chief Executive of the Australian Council of Superannuation Investors. And are most of your members retail funds or industry funds?
Most of our members are industry funds.
So we understand who you represent. Can you explain what a Say on Climate vote is?
Yes, a Say on Climate vote is a vote that takes place at a company's AGM. And essentially it's asking shareholders, it's the company asking shareholders to rate them on how well they are managing climate change. So this is a trend that has been gathering some steam internationally and is now the focus has now shifted to Australia. And we think that there will be quite a number of companies that will, from 2022, adopt a Say on Climate resolution, which means that the company will agree to put a Say on Climate resolution to their annual general meeting. And that means that shareholders have an opportunity to vote on whether or not they think companies are doing a good job on managing climate risk.
Okay, that's really interesting because the proxy advisors are certainly more active in this area too, as demonstrated by the AGM season late last year, and they're more likely to vote for climate change resolutions than against them.
So it does vary quite a bit as to how much support climate change specific resolutions attract at AGMs. And probably one of the big factors on that is, well, how well is the company managing climate change within their portfolio? And all shareholders have to make a decision on that. We give advice, proxy voting advice to our members, and we assess every case on a case-by-case, every company on a case-by-case basis. I think that what this opportunity does with the Say on Climate is it sort of formalises climate as one of the issues that investors will consider at every AGM, and I think that's a positive in the current environment.
Your new policy, what's the step up from your previous requirements?
So the new policy includes a couple of elements. Firstly, as we've already discussed, there's the Say on Climate element. But the other thing that we've done with this new policy is make it very clear that we think governance or oversight of climate within a company sits at board level. And if it's our assessment that a company is not doing enough on climate, we have said that we will now start to consider recommending our members vote against the re-election of the directors on that board. So in cases where companies are clearly not demonstrating that they are looking to the future on climate, there will be potential ramifications for the directors of those companies. So I should just clarify, the sorts of things that we want companies to do. And we've been really clear about this. And we've written to all of the companies in the ASX 200 just to make sure that everybody understands our expectations. But the sorts of things that we want companies to do, Sean, include we want them to disclose the way that they're going to manage climate risk by adopting a framework that's in common use around the world called the Task Force for Climate-Related Financial Disclosure. But we also want them to align their corporate strategy to the Paris Agreement and to the objective of achieving net zero emissions by 2050. And that will include things like undertaking really robust scenario analysis about what might happen to their company's operations under various scenarios, under various climate scenarios. And a lot of companies have already started doing this, but some have been a bit slower to act, and it's time for them to move.
That was my next question. So where do Australia's companies rank on this type of thing relative to overseas companies?
Yeah, well, there's a huge range, as you would expect, I guess. And some of Australia's companies are doing a really good job on this and have been early movers. Others have been slower to move. And I suppose that's reflected around the world as well. But in some jurisdictions now, the regulatory framework around climate disclosure and the requirements on companies to start aligning to the Paris Agreement and the net zero emissions by 2050, those regulations are quite strong in some countries. And so I guess the risk for Australian companies is that other jurisdictions get the jump on us, and start to move more quickly on managing climate risk.
So how do companies like Woodside and Santos and AGL, so the oil and gas and the energy companies who by nature use fossil fuels, can ACSI still recommend those sorts of companies vis-a-vis a very clean company, simply because the product it produces, maybe a tech company or something like that, can probably get to zero net emissions quicker? Is it about kind of making the effort progress rather than the absolute whether they're getting there?
We tend to compare across sector rather than comparing, say, an oil and gas company to a tech company, because as you've identified, it just wouldn't really make sense otherwise. And our main focus is on the companies that have a higher exposure, the sectors that have a higher exposure to climate change. So, oil and gas and coal and
Steel makers, things like that.
electricity generation, etc. But I suppose what we're saying to those companies that have a high exposure is we want to understand, what does your portfolio look like? What does the company look like in years to come when, say in 20 years, when we were really genuinely operating in a carbon constrained world? And if the answer is that they don't have a business, well, that's something that investors want to know.
Yeah, absolutely. I mean, as you said at the beginning, it's a financial decision. It's not just about improving the environment.
That's right. I mean, obviously, sorting out climate change is a critical issue for all of our futures. But in this instance, our focus is very much on financial risk.
We'll be back in a minute. My guest this morning is Louise Davidson, Chief Executive of the Australian Council of Superannuation Investors. Have companies engaged with you? Are they getting better at it?
Yes. So we run a program every year of meeting with companies in the ASX 200, and we probably have upward of 180 meetings a year with companies. So climate change has been on our agenda for a long time. Super funds in Australia have been really aware and focused on the climate risk within their portfolios for a long time. And this activity that we're undertaking is part of that. So this is part of helping super funds to make sure that the companies they invest in are doing the right modelling, have got the right understanding, are being open and transparent about what they're doing on climate risk.
Do you think that investors, because the government in Australia certainly isn't leading the way, is it investors or consumers or regulators that are going to have to force this change, do you think?
Well, it's probably a combination of all of them, really, isn't it? Clearly, we think that it would be good for the government to set a net zero by 2050 emissions target. We also think that companies and government need to set targets along the way, because it's one thing to say, oh, well, we'll be net zero by 2050, but we want to know, particularly in respect to companies, well, what are the milestones along the way that will give us comfort that you're on the way? But we also do think that it's really important for government to set targets on this.
Louise, are you comfortable with where corporate Australia is up to on climate change as we stand here and speak today?
I suppose the release of our new policy really says that we're seeking further comfort, Sean.
Yeah.
I think corporate Australia does have some way to go still. So we're trying to be very explicit about what our expectations are and how we'll be assessing companies over the next couple of years.
Louise, thanks for talking to Fear and Greed.
Thanks very much.
That was Louise Davidson, Chief Executive of the Australian Council of Superannuation Investors. This is a Fear and Greed daily interview. Join me every morning for the full Fear and Greed podcast with all the business news you need to know. I'm Sean Aylmer. Enjoy your day.